Palantir is one of the most exciting stocks to trade in the market at the moment, with an amazing comeback story going tenfold in a very short period of time. It's been a very rewarding and emboldening feeling for anyone who stuck around for Palantir, as things are definitely looking on the way up for this powerhouse in the tech field. With that being said, if Palantir is a trending stock in the market, it remains a company that few people truly understand, with angles that not everyone buying it fully get. Many are simply jumping on a bandwagon to make sure they don't miss out of something that may be life-changing. Whether you like or hate it, Palantir is definitely an interesting stock to study and to trade. Hi everyone, I hope that you're having a good time and making lots of money. In this video, we will talk about Palantir and see if it's a good fit for you. As the company keeps impressing the market on a daily basis, it has already reached several significant milestones for a stock that was trading at 1/10 of its worth not that long ago. The company's own break-even and profit saved itself from the abyss, and then the AI craze plus the changing political wind led the share price into a new phase of exponential growth. Palantir is now officially part of the major league, and its share price entered in the price discovery phase, where even the sky isn't the limit. Most people were hoping for a recovery or a comeback, and what the market gave us is simply a massive triumph for anyone willing to give the company another go. With the financial landscape moving thick and fast, it's not surprising if all-time highs are made every now and then for Palantir, and the market's volatility is a very sharp double-edged sword, and in this case, working to our favor. As one of the most symbolic companies in the brave new world, Palantir has been keeping the market's hope up to offer a safe haven for those looking to commit their assets in equities. AI may not be able to save us from the Armageddon just yet, but it might have saved Palantir shareholders from financial ruins. Over the years, Palantir has become way more than yet another tech unicorn begging for our money in exchange of pretty keynotes, and has become a major player in the sector and may tell us what the market appetite for risk exposure looks like, and whether there's a rising tide ready to raise all ships, or a hurricane ready to bury the dump money. Palantir has the brand power to trigger market's curiosity and people's tendency to follow popular trends. In other words, people would sometimes view Palantir as the risk appetite of the market itself and reacts to the macroeconomic tidal waves, which makes it a very interesting company to analyze and to perhaps invest in. And in this video, we will take a deep dive into Palantir and see if it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank each one of you for coming to my channel and hope you will enjoy your stay and to come back for more content. If you like what you see, please consider to like, subscribe, and to check out my channel for more content about Palantir or other companies I may cover. With that being said, I hope you're going to like today's content, and let's continue. Let's begin with the price action of Palantir and see how it's been doing in the stock market overall. Because over the past few months, Palantir has done very fine by itself. Its current volatilities is on the way down, but it keeps edging upward in terms of price, closing at around $120. For many, it's been a very rewarding journey with many rapid increases in the stock market, and the best part is that there will be plenty to come ahead of us. Over the past few days, it rose by 6.3% in the share price, thanks to the better than consensus earnings results, which is just the latest of the good news as far as Palantir is concerned, now priced by the market at more than $270 billion of market value. To think that not that long ago it used to be a stock trading just below $10 with a market value of a few billions is truly amazing. As things stand now, its 52 weeks low is $15.67 and the all-time high is at around $120.67. I think that given how things progress, there's little doubt that Palantir will eventually reach $200 a share. It's safe to say that Palantir is making new history in the market as we speak, as traders generally expect to see Palantir at a higher price point, as many wish for a safe haven in the middle of all the uncertainties. In fact, we can see a very clear trend line upward with one pullback earlier this year. That's like the only exception, of course. Palantir is still in its price discovery phase, and there's almost nothing that will stop it in the foreseeable future. The market volume is definitely up thanks to the recent price increases. Now, of course, the current demand is around like 65 million shares a day, but the 30-day average has been around 90 million shares. Palantir is one of the rare big caps that has very large retail participations, and its volatilities usually benefit from the more active and emotional trading style. With the current volume being relatively down, it may indicate the market's tendency to stay on the fence and to wait to see what's going to happen next. On the options market, Palantir's implied volatility is 58% and historical volatility is 85%, with the options demand at around 676,000 contracts, a bit lower, of course, than the 30-day average, around 800,000. The put-call volume ratio is around 0.97, so there are lots of people who believe, actually equal parts of people who believe that we may see a correction before things go even further up. Unlike many other tech startups, Palantir is definitely sensitive to what happens in the real world. Economic data, changes in key policies, and election outcomes can all influence Palantir's price action. The recent presidential elections turned out to be very good news for Palantir's price action. Peter Thiel, co-founder of Palantir, has always been a close ally of the President Trump. The company has been maintaining and developing its relationships with the public sector for a long time, especially in defense, healthcare, and customs, all of which are key aspects of the Republican agenda. Despite the fact that the company has contacts on both sides of the aisle, it's very obvious that from an ideological standpoint, the company is much more in sync with the current administration. In terms of the media coverage, the articles tend to follow where the price action of the company currently is. Some are, of course, suggesting caution given the recent gains accumulated so far despite a valuation model already very generous. Many suggest that Palantir may be on the cusp for more catalyst and growth given the change in the economic environments in the years to come, the interest rates decrease or the likely interest rate decrease, and the potential changes in the geopolitical events. News articles may not be worth analyzing one by one, but overall they set a tone, and it tells us what the media landscape tends to be as a forerunning sign of the trend continuation or reversal. The valuation of Palantir really is fueled by the company's own performance, the surrounding environment, and an eagerness or faith of investors to find a refuge in a very uncertain environment. Many people have been looking to find a decent entry point to make a comeback in the equities market, and that opportunity was found when the Japanese market liquidated billions of overexposed positions. That to date was the last opportunity to buy Palantir below $30 for anyone interested in the fundamentals. The next target is likely going to be in the 3 digits, given the current rate at which things go. Given the composition of its shareholder base being more retail than institutional, Palantir has always been a stock made of momentum and a large dose of anticipation and self-fulfilling prophecy, instead of level-headed analysis about its financial data. We're not here to buy Palantir that already is, but to own the Palantir that people hope will become over the next few decades. Any rational analysis of the current financial results may only justify, at best, the short-term price actions and maintain the price action to a high baseline, not to push the current one to new peaks, or at least not to the extent people wanted to trade Palantir for in the first place. We can see that the market reacts far more significantly to the announcements of keeping or gaining new public contracts compared to any other announcements. To a fault, Palantir remains heavily dependent on the public sector, and it certainly shows in the price actions. Looking back, and this is very far behind us, but the region with a lot of support is actually around $45. And since then, we have entered into price discovery phase, providing a huge amount of stability to any sort of price movements downward. These levels will serve as important markers for us because they indicate potential areas of price reversals or continuations, and the fact that they have been tested and successfully held means that the price action of Palantir is very resilient. The current consensus around Palantir is that the market wants to keep pushing things up and that they're constantly looking for more clarity and catalysts from the rest of the market shareholders before making the next move, since Palantir is still in this current phase. From a longer-term perspective, Palantir has a very interesting price action pattern compared to the all-time highs a few years ago, because it already succeeded in going beyond the previous all-time highs, and there's a lot of potentials regarding where it's going to land next. Palantir is a tech company created back in 2003 and went public in late 2020 at the peak of the last market boom. It operates in the data analytics subsector of the tech space and has been one of the leading companies in that area. It is known for its position taking, the relationships with public sector actors, and its engagement of key members such as Peter Thiel and Alex Karp. Another aspect that sets itself apart from many of its rivals is its proximity with the intelligence community, as the company relied on seed funding from the agencies back in the earlier days. No one ever shouts from the rooftop that they want to do evil, but Palantir certainly doesn't shy away from more delicate situations by working with public sector agencies in legal, healthcare, border control, defense, and law enforcement. Simply put, it is a company that doesn't mind being portrayed as evil and almost wears it as a medal of honor. In fact, shortly after it went public, Palantir decided to move its headquarters from the Silicon Valley to Denver, Colorado. This move was more than a pursuit of lower overhead or a change of scenery, but a statement about the public image it wants to portray. The market has always shown a lot of interest in how the company and the stock are doing. The fact that it went public when the bullish sentiment was sky high in the tech sector could have been a contributing factor, as the world was preparing for a fundamental change about how societies would function in a place where more interconnectivity happens while remaining remote from anybody in the physical world, a technological and societal utopia that was deeply flawed and never truly came to be. Palantir shares attracted the market's attention mostly because its narrative was the right fit in the right time, as the tail end of the quantitative easing era mentality combined with the pandemic era dream of interconnectivity and never-ending financial boom, while capital was looking for a safe haven from the uncertainty and the collapse of the real-world economy outside of our screens. In a way, Palantir symbolized the answer we wanted to slap on all our problems, and for some time it was made true by the supply and demand of modern finance. We are interested in Palantir's promise of reaching ever higher price levels, a promise that seemed set in stone when large quantities of money were pouring in a company with deep pockets backing it up, as the world was preparing to enter in a new era of endless growth and prosperity. This bullish and very optimistic narrative about Palantir has been backed up by the numbers. Financial information has been known to move the market as stakeholders want to have their assumptions validated by something concrete. Gross margins, cash flows, and revenue growth are some of the most sought-after data points that people want to know about Palantir when they do their analysis. The growth margin measures how profitable Palantir truly is at the core. Beyond the quality of its marketing campaigns, the hype around its projects, or its brand power, gross margin tells us whether there is enough demand for what the company is selling, and if each additional dollar covers the additional expense that the same dollar generates alongside. To that end, Palantir is a very successful company with a decent profit margin, even when the shares were trading below $10 during the last sell-off period. This was the first sign that Palantir is more than just an empty promise begging for your money. The business model is something that can be scaled up and marked up because it has true fundamental value and it is validated by the market and its clients. Once the core business model has been validated, cash flows tell us whether Palantir will need to go through cash injections to keep its operations going. And very often, a tech startup may ask shareholders to pitch in even after they bought the shares, because the funds collected from equity sale is not enough to cover the operating expenses. If that were the case, it would be a sign of weakness from the company because it would mean that the company's own operations are not profitable enough to stand on its own 2 feet. For Palantir, that problem is also non-existent, because its cash flows have been positive for quite some month, mostly because its operations are profitable and it doesn't need to dilute its shareholders to keep the lights on. However, these numbers are not enough to push Palantir higher. The most important factor is the growth rate of revenue, especially from public sector. Like many other tech companies listed on a Nasdaq, people buying Palantir want to buy the powerhouse to become, not the decently profitable company that is. This would also explain the high multiplier that Palantir is currently enjoying compared to many other blue chips companies in more mature sectors. This is a double-edged sword for those who want to dabble in the tech field in general, but for Palantir, the public sector aspect is an additional side to watch for. Since most of its growth does come from the public, any additional partnership with healthcare, defense, or law enforcement departments may trigger massive upsides for its shares. On the flip side of the coin, every time an existing partnership ends or a scandal makes it to the headlines, Palantir shares may see a dip that could take a few days to come back from. These 3 measures are what define Palantir and may explain its dynamics in the market in general. It is an interesting company that people are putting a lot of hope into because its financial results are good and do suggest that Palantir has the potential that people claim it does. Because Palantir is a highly specialized and unique company that is praised for its technical expertise and noticed for its position taking by its management and shareholders, it's always been the center of a lot of interest, talks, and speculations from the market stakeholders, as well as the media outlets. Along with Nvidia and Tesla, it's probably one of the most talked about companies in the world, despite the fact that it has a much lower market cap than many other blue chips companies. Hardly any day goes by without an article to be written by major media outlets about how Palantir is doing, or where they believe it's going to land. The coverage can be relevant in 2 ways for our analysis. The articles can give us a feeling or a sense of what is the current market consensus about what happened and the mood that is the most likely to influence what's going to happen next. Their tone is often determined by the price action at that time and plays the role of current trends amplifiers rather than contrarians showcasing potential trend reversals. Even if it's not a crystal ball allowing you to see where the price is going to go next, it can always tell you what the current sentiment is, which may allow you to take a hint of what the next move may be. The second level of analysis is more basic, but also more useful. It It is not about the content but the quality of the coverage. Depending on the number of articles written about Palantir as well as who writes about it, we can have a rough estimate of how popular the company, the narrative, and the sector are in people's mind. Alongside the potential upsides, entire economies may benefit from this as part of trickle-down liquidity from risk-seeking capital. Ultimately, papers want to sell clicks, just like investors want to get alpha. If there are shining bubbles in the market, news outlets are usually very fast to pick them up, validating the overall direction of any subsequent bull runs. The number of articles currently indicates that the market is interested in what happens with Palantir, and the anticipation is a further increase in price when the interest rates begin to decrease and fall. We just have to be careful about the limit of analyzing news articles, as they tend to describe the direction the wind is currently blowing, but far less effective when it comes to predicting where things are going to go next. Now, obviously, since you're looking up about Palantir, chances are there are unique aspects piquing your interest. Trading or investing in Palantir does come with its own upsides, including its unique profile, its potential growth rates, and the existing stability. Palantir is a company operating in the data analytics subsector, which is a very promising place, lots of favorable talking points and potential vectors for future growth going forward. The world is getting more digital and analytical on a daily basis, as more and more business decisions will need data-driven information in order to make that call, as well as to optimize daily operations and locate the trends of the future. Palantir has been trading for a few years, but its existence dates back more than a decade ago, and its expertise does bring it head and shoulders above many of its rivals. It has deep relationships with deep-pocketed public sector departments in defense, law enforcement, and healthcare that we talked about, all of which require Palantir's digital solutions for their planning and decision-making. Unlike many of the Silicon Valley unicorns, Palantir also doesn't pretend that it doesn't do any evil or that it lives in a perfect world. The HQ move to Denver, along with the Davos speeches of its CEO Alex Karp, do suggest that Palantir is willing to take on the challenges of the future and that it's not afraid to say so out loud. The relationships established by Alex Karp and Peter Thiel, two of the founding members of Palantir, have opened many doors in both public and private sectors, allowing Palantir to cruise on the trends. Recently, it also announced that it's going to participate in the trending AI field, which is one of the main reasons for the stock to go from $15 to $30. In addition to all this, Palantir does have a layer of stability that many of its rivals don't have, and that can be seen in its cash flows. Palantir's cash flows have been in the positive for some time already, which is a rare advantage above many of its competitors because it means that a company can sustain itself in terms of the needs and doesn't have to beg investors for more cash injections in exchange of dilutions. With that being said, investing in Palantir also comes with a few unique downsides due to its company profile and the characters of the sector itself. Being a company that analyzes data for a living, Palantir will be more exposed to potential legal problems compared to other industries. Since the topic of data privacy, ownership, and proper usage have been under heavy scrutiny from the past scandals with social media, how Palantir acquires, processes, and safekeeps those data while serving its clients can be open to legal battles, which may cost the company its image, reputation, its bottom line, as well as future opportunities to get more contracts from government agencies, the same agencies that may require these data that were maybe used under inappropriate circumstances. It's a bit ironic, but that's probably the way it's gonna go. My theory is that since this is a touchy, delicate area of this economy, and no one wants to rock the boat, meaning no one wants to take on the blame if anything bad actually happens, in that case it's possible that Palantir may take on the loss without having the capacity to shift any of the blame to other stakeholders. Because if they do that, they're going to rat on other people. And maybe they don't have the opportunity or the luxury of doing this. The other thing to consider is the potential decay of the narrative's value. AI and data analytics are very popular topics now. They're trending in the market, that's for sure. But what would happen if they stop being so popular once a newer sector has been created out of thin air or come back from disgrace? If we look at what happened with electric vehicles, we may see a similar drop in interest for data and AI, along with a potential drop in their market cap value for companies like Palantir. So, what these additional risk factors mean for anyone really looking into buying Palantir is that it is a blue chip sized tech stock with the volatility, or arguably with the volatility of a startup, mostly held by retails. Trading comes at a significant potential price volatility cost, and investing does require a fairly high tolerance of uncertainty. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Having said all this, my recommendation for Palantir remains consistent with what I've said before, with one little nuance. I would say that given that we are mostly in the price discovery phase right now, it wouldn't be surprising if we're not going to pull back anytime soon. So while it is very important to keep your pace for purchase at a consistent and relatively low debit kind of rate, it's also very important to keep some sort of footprint in Palantir, meaning you must have a certain position to have like skin in the game. Now, the share price does look a bit steep, so even if there are pullbacks, we shouldn't be surprised. But we should have like one of the scenarios in which at least Palantir will not be pulling back anytime soon, and we should be fine with this as well. I would recommend a maximum exposure of 8 to 10% of your portfolio in Palantir and to gradually purchase it over the next 18 months.